I've had a whole thesis that this thing was based around, it was going to evolve in 3 phases. First was the liquidation phase, which is what we saw going into March and finishing in kind of March, April. That's when everything is a correlation of 1 and everything collapses. Then after that, typically in a recession or a bear market, you have what's known as the hope phase, and particularly because of this, the virus and how that was going to evolve, the hope phase is the period when everyone thinks, actually, it's not going to be that bad. It's okay. And in some bear markets, that tends to last about 3 months. In most cases, bizarrely enough, whether it was the Nikkei 1990 or the S&P 2000 or the S&P 2008, it was a March low and a June high. There are other versions, 1929 being the main example, where it went on for 6 months. So that would take us into August. So those were the 2 theories I was playing with, that the markets would start to top out as reality sunk. Now, the difference of the reality that I'm seeing is that we're moving towards something called the insolvency. So when you talk about where am I on 1 to 10, so I've gone from 10 back up to 5 as we had the hope phase, and I'm now starting to go with back down again as I start to see the narrative pick up that the economy is not going to recover from much for a lot longer than we expect. There's no stimulus around, and we've got more problems to come in Europe, the US, and elsewhere. And businesses don't have enough cash flow. They're closing in droves, and that's what I call the insolvency phase.
That said, is that what has caused you to take a substantial position in Bitcoin, upping your stake to 50% now?
That has been an ongoing narrative. I've been involved in Bitcoin since, I don't know, 2012. It's been the ongoing narrative of, at the beginning of this, I knew the only answer would be cut all interest rates to 0 and probably negative, and then massive stimulus beyond anything which we've ever seen before. So the first phase, I wanted to be involved in Bitcoin, so I bought into the sell-off, added to my positions, and now I'm starting to see the shift towards insolvencies, and the only answer is more from the central banks. So that's why I've started to buy more and more Bitcoin. Technically, the setup's right. Obviously, we had the halving, and just the adoption phase, what's happening with the institutions, it's like the perfect timing.
So if you're now 50% Bitcoin, how has the rest of the allocation changed?
It's probably above 50% now. Really, I've reduced cash, put that into Bitcoin. My trading positions are relatively small because I don't think there's as much opportunity as there is in Bitcoin. So really, mainly a bit of cash, some gold and Bitcoin. And I'm even toying with the idea of selling my gold to buy Bitcoin, more Bitcoin.
Wow. Okay, well, I'll get back to it in a second. So when you say you have a little cash, is that still a hedge against your other holdings?
Yeah, it's also just for the optionality of, cash is good. To have cash.
So you're not like an anti-cash person, like cash is dead, cash is worth it.
Of course, no. Even if they have negative 5% interest rates and going to lose 5% in a year, it doesn't bother me in the kind of time horizon we're talking. If I'm talking about 10-year time horizon, of course I care. But over the next 6 months, even if there's negative interest rates, it's not the end of the world.
So I find it interesting that you're saying you'd consider selling some of your gold to buy more Bitcoin, because I always saw you, Raoul, as a hybrid adopter and lover of both gold and Bitcoin. Yes,
and I am and remain so, and I don't dislike gold, but when you get to the macro opportunity, when it's all happening, if Bitcoin starts breaking out of these patterns that it's been forming, it is going to massively outperform gold. I'm 100% sure of that. So in which case, why would I have the gold allocation? I don't think the money leaves the bond market. I think, like Japan, I think the bond market continues to attract pension assets and a whole bunch of others. So I'm not fearful of hyperinflation, default, or anything else. What I'm interested in is people adopting a different monetary unit for their savings and reserve assets.
What about central banks? And I asked Michael Saylor this as well. We've seen them buying gold at record amounts last year, the first quarter of this year. Do you see an adoption of Bitcoin?
For sure. It's all got to come in waves, right? It started with retail. It's started to move into hedge funds. We're not there yet. You can't prime broke Bitcoin assets, but that's coming. We're starting to see family offices in the space. Next is the institutions, the endowments, the pension plans. And within that, you'll find some government, it'll be somebody like Nicaragua or somebody will suddenly say, we've allocated 5% to Bitcoin. Somebody who's always had problems with currency devaluation. That's going to come, and it's going to be another huge story, much like the Michael Saylor story, that will come out of nowhere, and everyone's going to go, huh, that's just changed the world again.
I asked Michael Saylor how he sleeps at night after taking such a huge position in crypto. So I'll ask you as well. Over 50% for you now. How do you sleep?
I don't actually think about it. I kind of think that I don't sleep a lot,
right?
But also I'm not worried, because how I structure my portfolios is when I take a big bet like that, I know that I've got 50% downside or so, and that's okay for me because the upside's so much bigger.
You have one of the most bullish calls out there for Bitcoin, not just the $1 million mark, but $1 million within 5 years.
Yeah, I think that's about right. And that, whether it's 5 years, 6 years, we're going to go through 2 of these halving cycles. And just from what I know from all of the institutions, all of the people I speak to, there is an enormous wall of money coming into this. It's an enormous wall of money. Just the pipes aren't there to allow people to do it yet. And that's coming, but it's on everybody's radar screen, and there's a lot of smart people working on it. So I think it's going to be not because the world's collapsing, it's because there's going to be adoption by the real large pools of capital.
Interesting. Raoul, you've been in the markets a long time. Is this a market unlike anything we've seen before?
Yeah, I think so. I think with the economy right now, most of the global economy is down, let's say between 5 and 6% year on year, which would make it the worst recession since the 1930s. Now, that's after the semi-recovery. And then parts of the stock market are at all-time highs. Things like banks and stuff, and oil companies and the old economy are all falling in price because they're covered in debts or the economic models change. Yeah, this is a truly extraordinary market. I mean, to sum it up, the spread between gold miners, which are kind of limited debts, cash flow businesses right now, and banks was 86% by about July this year. 86% difference in the favor of gold miners versus banks. I've never seen anything like that in a 6-7 month period. People don't trust the financial industry and the financial media. It kind of let them down. And so we're seeing this broad spread. Bitcoin is part of this whole movement, this disintermediation, disaggregation of information, where people are taking their own power back to educate themselves, to say, enough's enough, I need to do this myself, I need to understand what's going on. And that's so good.